Nothing much. What's happening, man? What's happening? You had it. You had it. Yeah, you still got it. How long ago was that? Then I mean, you still got it, huh? Just because you ain't got no more symptoms don't mean you don't have it, right? Oh, okay. But you're drinking that elderberry. Okay. Baby, tell you what.
So you had a heartburn.
Next flight investors.
They will do that, you know that. They don't know. Yeah, they don't know. Joker say he was on the gallows, boy. Hey, I messed up, man.
What's the next play? What's the
Good evening, good evening, good evening, good evening, good evening. How's everybody doing? Welcome, everybody. Welcome to another great Sunday of the X Play Investor Show. I want to invite everybody over to, and say thank you for showing up. This is the group where we talk about all kinds of things as far as insurance, investing, real estate, stocks, business, finance, everything. We're just a common goal. We all as a group just get together on Sunday, sit around and talk about things that can actually make life better. Be able to, facilitate trying to keep everything on the up and up, and we share it with the friends and peers that are out there that want to listen and kind of get involved. You can join us every Sunday from 7:30 p.m. to 9 p.m. And we always here, so you can join the group on Facebook, watch us on YouTube, catch us on Instagram, and you can actually join in on the conversation on WhatsApp. We're just a group of friends, different peers, men, women, and children, everyone that's want to learn about different things about investing. The only way that you actually learn is get around people that's actually learning. So, we invite you here every Sunday to talk about it. If you got something you want to share with us, you got something that you want to actually get involved with, and you want to actually talk about because you want to know what's going on, definitely drop us a line at explainvestors@gmail.com. We got everybody. For people that's the first time here, so what we do is we get in, we go over and check out everybody else and get going. Then what we do, we basically we basically go into a group chat function where we sit around and actually figure out how to make all these things actually work. And so that's one of the things that we actually do here at Next Play. We talk so any a lot of times we're in a situation where a lot of people can't get around people to talk about investment experience. You got to always remember here at Next Play Investors, everybody here is actually doing true. Everybody here is actually real investors and using their own money and using these strategies to be able to better their own life. It's all about building generational wealth for your family and being able to learn from other people that feel and look like just like you. So let's get over into everybody else and see what's actually going on. And join everybody on the live, and we're gonna get started on tonight's show. I appreciate y'all actually joining in, and let's get this thing rolling. Uh,
Yeah, man.
What's
Yeah,
going on,
definitely.
y'all? What's going on? What's going on, man? How y'all doing? How y'all
I
doing?
was gonna look at it tomorrow, man.
What y'all up to, man?
Oh,
Can
you
y'all
got a
hear me?
vehicle.
What's going on, man?
Oh
How
yeah.
y'all doing? What's happening?
What's happening, man? How you doing?
What's up, man? How everybody week, man?
Hey, man. Wonderful, wonderful. We here. We here again. Next play. Trying to figure out what the next play is.
Okay.
Trying to survive this market.
Oh, everybody want to survive the market, huh?
Yeah. Well, I got a little tidbit that might help some people.
Oh yeah.
No, yeah. We got something to add to the
Oh
pot.
man,
We
I
gonna
can't.
throw it in the pot,
We're
boil
gonna
it up,
throw
and
it
see
in
if
the
we make
pot.
some good soup.
That's a good thing, man. So how everybody doing? Reggie, Stacy.
Hey man, it's good to be back.
Hey man.
Rainy days in the market right now.
Boy. Woo.
Rainy days in the market.
I
But
think
like they say, what goes up must come down.
yeah, that
That's
makes
for
sense.
sure.
I mean, let's start it off. Ethereum's down to $2,000.
Hey man. It is what it is,
I
huh?
think it's 25, isn't it?
Nah, it actually hit
Nah,
2,000.
it's at 2,000.
It said 2,000. It hit 2,000
Oh,
earlier today. But that's a good
Yeah,
thing.
wow.
exactly.
That's a
That
good
means
thing.
it's on sale.
That's a good thing. You know what I mean? All of the crypto market and stock market are on sale.
Hey Franco, I'm
What's
gonna have
up?
to be like you.
What you mean?
It is, but it ain't.
It is, but it ain't.
Yeah.
It is, but it ain't.
It just depends on what side of the check you're on,
Just
man.
depends on, what part, where you at in this market.
Right.
If you invested in it and you didn't do what you need to do beforehand.
So
Yeah.
we talking about portfolio management.
Yes, sir, boy.
So that's what we talking about.
I'm in it.
Portfolio
Hey,
management.
they got me for the long haul now, boss. I gotta wait for it to go
So,
back up. I can't
but
touch it.
but see the thing is now listen, we old school players, old school investors. Have we not seen it before?
Oh, most definitely. Yeah.
And look at what happened with Corona. That's why it's so interesting because people think that oh God, oh God, oh God, but the people that took the money out of the market, they just waiting because they know the tide finna turn. It's a cycle.
Yeah.
They know exactly. Okay, let's pull our money out of this part because they getting ready to pull the plug on this. We got to have our money to go over there and make the money when they drop it over there, and then it's going to continue the cycle. We were just at the beginning of the cycle, and and
Yeah.
that's the good thing about it. So I think everybody gonna be happy with it. Once it come all down.
Well, it should. Hopefully. The market is the market, man. And it's been around for over 100 years. And it's been up and down. And, a long time ago, they said the market always come back. I think somebody might have told me that like 25 years ago.
Mm-hmm.
I wanted to get out of the market. And they said, oh, the market always come back. But I was so young. And I was like, nah, give me my money right now. But I wish I would have learned. I wish I would have stayed in at that time.
Yeah.
Because I would have been in, like I said, I was young and I didn't know. So
Yeah, man.
Well, I mean,
that's how it is. But
explain that
we're
that's
getting
the
so
same
far.
thing. That's the same thing for me. So
Yeah. Same thing. So we'll get started. I guess Nicole is requested to be around shortly.
Okay.
And so here at Next Play, everybody, welcome back to Next Play, where we talk about stocks, real estate, investments, passive cash flow, cryptocurrency. And this week is like no other. It's a different week. And we're trying to find out what the next play is. So if you're on YouTube, Facebook, like, subscribe to the channel. You can always watch the replay on Facebook. And we'd like to start it off with some good vibes or what we call our success stories for the week. It could be anything that was successful. And I started off this week. That is, I was able to read 5 days this week for at least 30 minutes. I'm reading a new book on charting. And this week I was able to read 5 days for 30 minutes, which is big for me because I'm always pretty busy. So that's one of my success stories. And another one was a option trade that I did on this company called AVTR that I bought. And I bought it on a recommendation, and the stock didn't, it didn't do as well as I thought it would, but I was holding it, trying to get out in profit, but never did. So what I started doing on this particular stock is started doing covered calls on it. And I did a covered call on it, collected the premium, which was only about $50, but the stock was going down. And I was able to collect the $50, holding in profit, and I still own the shares. It expired on Friday. So whoever on the other side, there's two sides. On the other side, they lost, I won, and I'm able to put them up for sale again on Monday. So those were my two success stories for the week. And I'll pass the mic on to whoever wants it.
I'm gonna take the mic.
Well, I'll follow up.
Go ahead, Sam.
Oh, you want to go ahead? Go ahead, Franco.
Go ahead. You started.
Oh.
I'm just chilling over here. I'm working.
Well, I had a little bit of time, and I did a little bit of reading. Building an elite organization. Just another one I just started reading. Trying to get exercise my brain a little more, do a little more reading, getting more info. Because as the way that everything is, they try to hide everything in the literature. And if you don't read it, read the small print and start familiarizing yourself with the way that they do things, you will become absorbed and lost in all what's going on. So basically just training myself to, look in the pages and read the stuff for myself versus, listening to other people, whatever. In other words, I'm like going from the show me state. I need to see it and read it for myself. So that's what I'm sort of trying to retrain myself to do. And on another positive note, with the way the stocks are trading and stuff, it made me revisit some of my, go back and look at some of the stuff that I've learned over the past and just, revisit a whole lot of stuff and, just basically brush up on some of the techniques and some of the things that, I had gotten slowly started getting away from, and I just sort of bring it back home a little bit, whatnot. Other than that, man, that's been my positives. I could say some negatives, but not really a negative. Like I was telling Franco earlier, it is, but it ain't. But, it's just one of those things. Had I stayed, true to what I know to do, I wouldn't be in this situation. But it's a learning thing. It really didn't lose anything. It's just the fact that I just gotta hold it and wait now. So, sort of say. But that's it, man. I'm gonna pass the mic on to Franco, and we go from there.
My success story. I beat COVID. I ain't gonna lie. I beat COVID. That was my success story. After 2.5 years, I finally got COVID. And, even though the test came back negative a bunch of times, I ain't never felt no feeling like I felt last week. I took myself to the hospital, all kinds of stuff. I had these folks run all kinds of tests on me. Listen, I'm all right. You know what I mean? But that it was weird, man, because I knew like them feelings, man, was crazy. But in the midst of having COVID, hold on, I'm gonna stop and do that. Hey, sequester. All right, but in the midst of in the midst of everything that went on last week, I got a lot done. And a lot of stuff, man, like I told you, I had on, I'm always talking about mindset. Like what I did if everybody's been watching since November, if you catching all the shows, I had to get myself in a mindset, man, to kind of get back on track, man, and try to get some stuff done. And all my getting back on track, it actually paid off this week. All me getting my mind back together, all me, doing my morning rituals, getting back up, trying to eat better. That's what helped me beat COVID too. You know what I mean? Because I had been training my mind and I had been getting my body back together. You know what I'm saying? And so I already take a lot of vitamins. I take about 12 vitamins every morning. But because I had been exercising, because I had been doing all the things, eating better, getting my eating back right, that's what really made it. I basically didn't even know I had it. You know what I mean? I thought something else was wrong. I thought I had heart problems, all kinds of stuff. You know what I mean? And so that paid off. But then on another note, business credit. I mean, I started getting my
Whoa,
mind. I started
Well,
getting my mind back right, and
whoa,
I
oh.
actually did the work way back. We gonna talk about business credit some more on him, but I actually got a bunch of credit lines this week, just being at home, having the time to sit there and work on them, putting my mind back into the place of, you know what I'm saying? I got to get my business back right. I got to get back on the feet. I took a lot of losses a couple of years ago, and then the pandemic hit, so I really wasn't focused. I was just trying to make it, and so now that I got the business credit stuff set up, man, I got some big credit lines, boy. Ooh,
Ah.
ooh. Hey, I'm gonna tell you, man. Listen, man. We gonna talk about business credit because I'm gonna tell you something, boy. Them folks give you money. You know what I mean? So it's been a crazy. Like Sam said, it is been a bad week, but it ain't been a bad week.
Man, man,
So man,
man, that's awesome though.
yeah,
Business
it's
credit.
real awesome, man. I was surprised. You know what I'm saying, man? Myself, I was like, whoa, they gave me that. Woo, I'm finna go there. I'm finna do all kinds. And then I thought about it. Nah, don't fuck this shit up.
Yeah, that's good. Hey, but you know what? When we went to that conference in Orlando, and
Uh-huh.
those folks in that conference were talking about how they don't pay any taxes,
Uh-huh.
and it's just like business credit. All
yep.
you did was play by the rules that was set out there
Yeah.
that you didn't know about.
Yeah.
And the dude said the same thing. He said, "We ain't doing nothing wrong. All we doing is playing by the rules."
Playing the game the way they set it up.
hmm Playing the game
That's
Yep.
by
it.
playing the game by the rules. Well, I see. Man. I ain't gonna say I'm a straight shooter. You know what I'm saying? I got a crazy background, but I do
Yes, you are.
know.
You're a straight shooter.
Well, I am a straight shooter. I definitely am that. But
Yeah, there you go.
you know what I'm
There you
saying? I didn't know because I come from a background. I've been operating my business in my life like shit. Fuck credit. I hate to be vocal on him, but that's what I've been saying because didn't nobody teach me that. You know what I'm saying? And I learned it from people in the group. You know what I mean? I'm gonna give a big shout out to Station Cash Flow. You know what I'm saying? Because he been on me for years. Like, man, you need to start on this. And man, I'm like, man, I'm trying to survive. And so that's
So
why
you
I
were
said,
treating it like a hustle.
yeah, I was treating it like a hustle. You know what I'm saying? Even you make money. I mean, you make a lot of money, but it was a hustle. It wasn't a business. And then to realize, like, wait a minute, you ain't got to spend your money. You just got to set it in
Exactly.
place.
Wow.
You know what I'm saying? Like you don't.
That's
Wow.
Yeah.
that's the key word. Say it again. You
Yeah.
ain't gotta do what?
You ain't got to spend your money. The world is set up where you don't have to spend your money.
There you go.
And I mean, it
That's
There
goes
the
you
into
crazy
go.
part, ain't it?
and it
That's
goes
it.
back into what we gonna. I think we probably talk about this year. We said it, man. Where you can actually get paid to spend money.
Yeah.
And we
Yeah.
gonna, and that concept is crazy to some because we come from a culture that's struggling and crabs in the barrel, and because we thinking that the money pool is so small, but the money pool is so vast. I mean, and you don't even have to have any money to have money. That's the crazy
Nope.
part. Like, you don't have to have a dime to have a dime. And when you sit back and think about it, like, wait a minute, I don't have to have nothing, and I can create something if I learn the rules. And just like you said, Sam, reading a book. You got to read a book.
There you go.
You got to go study, and that's why we get here on Sundays. But You got to go read a book. You got to go learn from people that know what's going on to be able to create the situation that's going on. And a lot of people, like I tell you, I'm glad and grateful for everybody here, but it's a crazy situation when you realize you don't have to have a dime to have a dime. And you can spend more than a dime.
Yeah.
And you ain't got a dime.
So back to what Sam said, it's right, but it ain't right.
Yeah, it's right, but it ain't right.
Hey, I was reading I believe one of the guys I was listening to, he said one of the quickest ways to become wealthy in the United States was to go in debt.
Well,
Right.
That's the craziest part. Go in debt.
That's crazy. Now it makes no sense. It don't even sound right coming out your mouth, and when you hear it, but when you actually understand what they're talking about, it makes perfect sense.
But you got to understand, I guess how a lot of us were raised and culture. So the credit card was bad coming up. You're gonna mess your credit up. You're gonna mess this up. You know, don't do a refinance on your house because you could lose it. You know, they used to call it mortgage. Don't mortgage your house.
Yeah.
Because you could. You see what I'm saying? Because you don't know.
But that goes back into our culture. I'm talking to some people over the last couple of weeks. Like I've been, that I know, in our culture, a lot of people don't got houses. I know, and they like, I'm just gonna sell it. And I'm like, why would you sell the house? You can make so much money with it. Well, I don't want to deal with it. But you want to go to work. You know what I mean? You want to work your butt off when you got something that can make some money. So you take the quick lick where you can use the money and the finances to make more money. And a lot of people don't seem to kind of get it like that. They like, oh, I don't want no more
You know your
mortgage.
car get ready to go out. Your car going in June.
I don't want no more mortgages.
Most people don't understand that. Most people just don't understand it. And no matter what you preach, I've tried to preach this. I got a niece back in Illinois, just bought a new house. And the first thing I said was, and this was right at the beginning of the pandemic, as soon as they started issuing them, the
PPP.
Forbearance. And I was like, so what's that forbearance look like? And she's like, nah, man, I ain't doing that. I'm like, that's the wrong mentality. I was like, you need to do what all these other people, certain melanin content people are out here doing, and get you that forbearance, take them house payments, and instead of buying a Lexus, you need to put that into something that's going to pay you back. So now you're building equity. And a lot of this stuff, there's a lot of these people that are barely having to pay back most of these things, most of these loans, most of these things.
They're forgiven. Yeah.
And that's free money.
What? We about to go in.
That's free money. And the thing is, I guarantee she never got around to it. And I preached until I just got tired of preaching about it.
Well, I mean, and that's the thing.
Ain't gonna listen.
Well, that's the thing with the people that I talked to over the last couple of weeks. That's what I just don't want to deal with it. It's too, I don't feel like coming down here. But you own a piece of property that can pay you for the rest of your life. You see what I mean? And you can make revenue off of it. So you'd rather take the quick money that you're going to blow because you don't know how to manage your money anyway. You don't know how to make your money grow for you. So you're just going to take it, put it in the bank, let them take their percentages off of it. And you basically run through it over a period of time, and then you're gonna be mad 5 years later because it's only you get a couple $100,000, it ain't gonna last you forever because you ain't got nothing to do with it.
Worse yet, go buy you a Cadillac truck.
Yeah.
And I mean, it is what it is. And we got a term for these folks because when you preach to them and they say, they agree with you. And then when you follow up, they never, they never get around to it. And I call them finna friends. I'm finna do this. I'm finna do that. Don't worry, I'm finna make this happen. I'm finna go do this. I call them
Pin of friends.
Pin of friends.
I'm gonna use that.
Y'all touched on that PPP loan, and a lot of businesses in our culture didn't apply for it because they were afraid. Let's just keep it 100.
Yeah.
They were afraid. Now, I'm not going to let the government in my business, but the government is already in your business.
In your business.
EIN number,
I'm
you
gonna be
know,
honest
and
with you.
then
I was one of them afraid people.
right.
I got my 1,000. I'm still waiting on the 10K.
Oh my gosh. Well,
But
I thought I got that 1,000 real
get
quick.
over my fear. I did get over my fear quickly. Real quick.
yeah. And then as far as the PPP is concerned, if you had all your documentation in order, they forgave it. They gave all the money. It was free money. It was here for the businesses during the pandemic, and they forgave it, and they just wiped it clean. They just wiped away the fiat.
All these doors are closing now, though. So these are all going to be moot points. Just like the whole refinancing, getting some equity out of your house, all this stuff, all these doors are closing.
Okay,
let's
talk about that for a minute. Are they closing, or has the line been drew in the sand, and now we can move forward? Because that's why it's called a stash and crash today. Because the line has been moved forward where everything, and me and somebody was talking about this week. The line has been moved forward where a house that used to be 200,000 is 600,000. Where things that a truck used to be 40,000 is 80,000. And now even wages are actually moving the line. So are we talking about it's going to go down, or are they setting the baseline and they're going to let it drop a little bit, but it's going to stay at that line? That's the question that we got to ask ourselves.
Well, I don't think there's a good answer to that question.
Okay,
because I really believe that with our people, all that they've done, again, because like I said, man, I the reason I chill with y'all is I ain't got y'all's wallets, but I know exactly what you guys are about, and I like to hang around people that think alike, because I try to preach to a lot of my people, and they're not hearing it. They're just not hearing it. And you can lead them to water, and they're not drinking. And all this is doing, the free lunch is gone. And the thing is it's about to be gone. I say by the end of the first quarter, we literally had a free lunch. Stacy just put it that way. A lot of these people cleared out and made it scot-free with this PPP money, with the small business money. I even got some free money out of it. And the thing is that these doors are all closing, plus the interest rates are going up. All these doors are closing. And those were free lunch. We're talking once in a lifetime that kind of stuff happened.
It was.
And like I said, people of a certain melanin content took advantage of that. And if you had houses, if you had assets, things like that, before you went into it and you held on to it, you're doing so much better. All this stuff has done is increase that wealth gap.
So that brings the question: is it because our culture? Because we are. Reggie, you wasn't here yet then, but we always say that we got to have a worldview of the world, not just our culture. You know what I mean? That's what Next Play Investors, everybody here already understand, having a worldview, because looking at the American economy, we can't do that in crypto. We can't really do it with stocks because there's so much investments around the world that are made into the United States. So let's take out, I'm not trying to downplay the black thing, but let's look at it from the perspective of, and take the black element.
I just didn't know that we could say that. I didn't know that we could say that, Franco. That's why I said people of certain melanin content.
I'm Franco.
We're in a public forum, so I try to watch my words.
I ain't from corporate America, and so I take the hit for everybody. You know what I mean? I'm just an old lowly man. You know
all right,
what I mean?
Mr. Chappelle.
Yeah, I take the hit for everybody, but let's broaden the outlook as a group And let's look at it from the world. Let's look at it from the world standpoint, because we know as black people we behind. That's why we created the show, so we can meet every Sunday and talk about this stuff. So let's take our people out of it and let's hear from everybody on how they think on a world level. You know what I'm saying? Because we know we didn't do right, but the people that did right, what do we think that they're going to do? How are they going to handle? That's why I asked the question: has the bar been set, and they're ready to act on it from here out? Because we know the Dow goes up, so the Dow goes up. It has been going up from the beginning. Stacey reminds us that every week.
Right. But let me, since you mentioned the Dow, let me butt in and say, okay, there's an investor named Paul Jones. If no one ever heard of him, check him out. He was an investor. I don't know if he's still alive or not, but Tudor Jones, he's managed about $13 billion, and his rule of thumb was the 200-day moving average. Anytime a stock drops below that 200-day moving average, he sells out. That was his rule of thumb. Well, the Dow is now below the 200-day moving average.
Mm-hmm.
So I think you probably want to look at all of your stocks you've been holding, right? If you're not already in the red, but if you're in the green and it's above the 200-day moving average, you may want to take some profit. If you don't know anything about the 200-day moving average, if you would TD Ameritrade, I know that you can call them, give them each one of your stocks, and they will look it up and tell if it's below the 200-day moving average.
And that's the one.
But right now, the Dow Jones Industrial is in a downtrend. If you look at it on the chart, and it's below the 200-day moving average.
Yeah.
So that's what I've seen. So I'm just watching the trend, and the trend is like down, 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 down. And so a lot of the other investors, because they know that the market's not going to go up forever, chances are they sold out at the top to collect the profit, and now they're just waiting for their time to buy back in and just play the market again. Play the market for what it does.
And the crazy part about that too now, I'm going to say this because this is what we got to understand as investors. Notice that when he talks about the downtrend in the stock market, guess what else is on the downtrend? Cryptocurrency. Everybody's pulling their money to get ready. It's the cash. It's the crash and stash. They stashing all their money to actually come back and actually put it back in the market and let the suckers get ate up.
The seasoned investors are.
Yeah.
See, and I thought about it. Maybe this is a way to get some of that money out of the market. We were just talking about all that free money, and a lot of there's more retail investors in the market than there's ever been in cryptocurrency, in the stock market, buying penny stocks with Robinhood, all these new Webull, all these new trading devices on your phone. So a lot of people did take their PPP money and their ELD money and invested in the market. And this could be a way of getting all that money back, because if you are a newly retail trader, you've never done this, you 8 months in, and your portfolio went from 10,000 to 5,000.
And you don't know
you don't know nothing about the market.
Yeah, I just
somebody at the barbershop told you, put your money over here. It went to 10,000, now it's 5,000. What you gonna do if you don't know half of what we know?
Yeah, these a lot of these people, Stacey. I just we were talking about at the beginning what we had read or anything like that today. Earlier today, I just looked at a case study from PensionCraft, and it was called "Don't Buy the Dip," and they were talking about exactly what you were talking about right now, comparing buying and holding for 30 years. Just dripping it in, okay. And holding for 30 years with the S&P versus waiting for the S&P to do exactly what you're talking about, okay, to drop and then keep paying into an account and holding on to the cash until it dips, then take all that cash. So say it dips every 8 to 10 years.
Right.
And when it dips, then you take all that cash and you throw it in at what you think is the bottom.
Right.
He ran 2 charts and ran them together, and it worked once, and that was mid-'80s. Okay, that was for the 80s crash. All the way back to, what is it, 1920 something, when they first started keeping record. S&P killed it, and S&P always outran you trying to time the market. And now they're trying, and he just ran the same chart again, because a lot of people are thinking exactly the same thing right now. I believe, now I don't have anything to substantiate it, but I truly believe that the reason that the market is down the way that it's down is because of what you just said, is that the retailers are bailing. The whales aren't necessarily bailing, they're just moving things. They're moving things from one area to the next, okay? Because money doesn't just disappear. We can create money. Jerome Powell does a great job at making money out of thin air.
Correct.
But they don't you can't disappear money out of thin air. So that's one thing. And because we have all that extra money, it's got to be going somewhere. These markets are coming down, but even though these markets, where's that money going? It's sitting. People are taking. I follow Meet Kevin too. Meet Kevin just took. I forget whether it's 20 or 80 million. And he just yanked it all out because he is waiting on two catalysts. One is this coming Wednesday, and the other one is beginning of next week. I can't think of them off the top of my head, but I can go back and take a look and then give you those things when I revisit it. But he decided to take that risk. He pulled out. He's got a couple puts in, and he's going to sit tight and wait to see what these big reports say. Number one, last quarter earnings, and I'm trying to remember what the other one is. I forget. But the thing is he made a big pull, okay? And that's risky in my humble opinion, because I don't, if you got that kind of money to play with, that's great. But again, I'm only, I talk a big game, but I only play with sandwich money. So the thing is at the end of the day, I don't got that kind of money to make that big of a pool, because I still got to pay rent. And if you got it like that, you can take that risk. And all those people that have it and have assets to lean on, even if you just have a house, something to lean on. Because the worst case scenario you got when you have a house, okay? There's still time to refinance. Interest rates are still low as heck, okay? And if you make a bad play and they margin call, say they do a big margin call on your puts or something like that. The worst case is, remember Franco just mentioned this, houses are selling for ridiculous amounts of money. So either you refi or you sell and you still come out ahead. So a lot of these people are in situations and they're going, man, I ain't got nothing to lose. What's the worst case scenario? And they're running the worst case scenarios, and they are justifying their risk. That's why this money is coming out of the market, is their risks are calculated and justified. Right. I wish I could do that, but I understand where they're coming from, because if they can do that pull, get a couple puts in the right place, and once those puts come through, that's how they can sense the bottom. Then they go back in and boom.
But also think about this. Also, they got to take profit too. Yeah, these are hedge funds. They get paid for making investors money, so they have to take profit. And the market's been at an all-time high all year. All last year was at all-time high.
How about I pose this one right here? How about I pose this right here? What if I pose this statement right here? And it's probably gonna hit home for a lot of people. You know that 3% that you're supposed to get for that 3% you get, that 3 to 4% they give you on your 401k at the end of the year. They just took it out the market so they can pay you. They don't make money, and just like you said, they got to take profit. And in order for them to take profit and make money off the money that you invest in your 401k and all these investments, at the end of the year, they got to take money out so they can pay those profits, because they made money over the entire year. And that's the thing. When you see the money coming out, somebody has to, like, it just don't run. It just, like you said, Stacey, it just don't run up. Somebody winning every
Right.
time.
And also, think about it. You take profit at the top, okay? Because this is what these guys do for a living. They money machines. They make money. They take profits at the top. Just like Reggie said, all this money is coming out of the market, and so they putting puts on all these stocks, so they're making money while it's going down. When it gets to the bottom, they made money at the top. They made money when it was going down, and now they're going to put this money back into it at the bottom and let it ride all the way back up. You know, I was doing some studying, and they come out with the top 5 hedge funds investors for the weeks, stuff like that, of the month. And the hedge fund investor of the month, I think he was up like 300%. I looked at what he was doing. Everything he was doing, he had puts. That's how he was winning, all puts. I was like, man, this dude's up like 300. And then the second one was Warren Buffett. He had no puts, but his percentage was maybe like 6%. And then this is kind of like off the subject, but a lot of the puts I've seen, man, a lot of retail investors got jammed up in ARKK with Kathy Woods. It's like she got a bullseye on her back.
Well,
and they are shorting everything with an ARK investment fund, man. I hate to say it's bad. It's kind of biased, I think, but I don't know.
You're right. There's a lot of money that has been swinging out of tech and out of innovation. That's very true. I know because I got plenty in there. And, well, not plenty. Like I said, sandwich money. Plenty is a relative term. Let's put it that way.
Okay.
So, for some people, $5 is a lot of money.
Right.
So, but I have seen that. But a lot of those people, and even like myself, I haven't pulled anything out to try and risk finding the bottom. And the reason is because, again, I know myself. The other thing is to know yourself and know what your goals are. Okay. And if you don't have the discipline, you're like, ooh, I see an opportunity. Sometimes when you see an opportunity, it's kind of like I think Warren Buffett, like you just played those the two hedge funds. Okay, you played the two sets of investors. One of them's playing it high risk, but Warren Buffett ain't got nothing to risk. He's already got it. He's already got it like that. So he doesn't need. He doesn't see the need to play that risk and get that reward. And that's kind of. I definitely am in a situation where I ought to be taking a risk, but I just know that me and Murphy's Law don't always coincide that great. And I've never been that great of a predictor of the bottom of the market. Also, I don't spend that much time watching the market. I'm not a hawk on the market. So unless I had somebody that was in my ear telling me exactly, when to put, when to collect, when to get in, when to dump, that's not the case. Now, if any of y'all got some people like that, then
Well, I ain't gonna tell you no lie, Reggie. Everybody on this call, well, I ain't gonna say everybody. It's about 3 people on this call that can really explain that to you. Cause there are ways to do it. It's one person we already know is immaculate at it. It's a couple other people that be on the call that really, they're good at it. I mean, there are ways, and we got some training material. I think this year we really gonna make some changes and get it where y'all can train and look at some of this stuff. But there are ways to actually you're not gonna be a guaranteed predictor, but that's
right.
one, you know what I mean. But they have tools that are available, and when we first started, we talked about the tools a lot, and the charts.
Data.
Yeah, the data. Like we're in an age now that we're not trading like the 70s. They're using computers to actually facilitate these trades. So the computers operate on zeros and ones, and we have to operate in the mindset of a computer and use data to try to interpret the things that are actually happening. And
Yep.
we learned about back testing, and we're gonna bring that back one week. We may do it through the week, not on a Sunday. We may have a try to do a charting where we can show like back testing how the MACD works, how the Bollinger Bands and all these different metrics that you can actually learn how to use. They can actually facilitate you being able to look at it, because again, like we said, we have to remember that's the same thing with crypto. Crypto is the wild, wild west where people don't have no rules. We got the SEC in the stock market, so you got to kind of be looking at the metrics of what's happening through data and be able to that's how it'll help you, is learning, you know what I mean, is learning how to read the chart. But I do have a question for you, Reggie. Do you
Yeah.
ever take profit out of your stocks, or do you just let them run?
I have yet to, and but the reason is number one, I'm not that long invested, and I don't got. I mean, to be honest with you, like I said, I mean, I'm being for real. I don't have that kind of money invested, and because I'm already looking at 50 this year. My goal is I'm not worried about taking profits right now unless I got some bills I need to pay. I'd rather keep it in and worry about, my retirement, which is coming in, less than 20 years.
Okay.
So
I want to say something.
Go ahead.
Sammy, go ahead.
Well, me and Stacy was hanging out this weekend. We ran into a cat. This young man, to me, he was young. I don't really know how old he was, but
He was in his early 40s, maybe around 43.
But what stuck out to me is he said he took $80,000, and right now he has 13 million, and that's with a loss. With a loss, he said he took a 2 million, something like that. He lost.
Yeah, it was 3.2 million he lost on a trade because he didn't push the sell button.
Made one mistake. Yeah, that was
really a mistake on the trade.
That was it. But he took $80,000 and turned it to 13, really, 16, really, with the loss of the 3 mil. I'm like, what? But when it comes to us, we're wondering, we don't want to risk no more than 5,000, 10,000, but we'll break our necks to go get a $80,000 vehicle and put it up on tires, rims, and everything else.
Mm-hmm.
Bro,
and
you got to change the mindset.
And credit, guess what? You don't even gotta have 80,000. You ain't even gotta have 80,000. To be honest with you, you don't have to have a dime. You just gotta know how to use that dime when you get it. You don't even need 80 grand. You don't even have to have 80 grand cash to do what we talking about. You just got to be smart enough and have the mindset to take the steps to learn what's going on. And you can use your credit, that same loan that you got a car for. If you apply, if you approve for the car, you can get approved for a loan to trade with. And most people like, I don't want to trade. I don't want to use my credit for that because I might lose it. But as soon as you buy the car, you lose.
You lose it, yeah.
You lose as soon as you buy the car. So
right, because it goes down in value.
Yeah, so like why are you tripping about losing it, and you could triple it when you automatically, when everybody knows when you buy a car, you automatically lose. So like the craziest part about it is you don't even need money to make money. You just gotta have the resources to go get the money so they can actually give you the money. Hey, Nicole.
Your mic is muted.
Your mic is muted.
Thank you, Franco. I'm glad you're feeling better. Stacy, the guy that you all met, is he out of Atlanta?
Yeah, he's out of Atlanta. And
okay. Does he have a stock group?
No.
Well, according to him, he does have like 2 guys that trade with him, right? And so to clarify how he made that much money off of the 80 grand, he does something called scalping, and he uses the data that we just talked about. So he uses charts, He actually used the moving average. His moving average was the 10-day moving average, and I think like a 60-day moving average. So he had a trading plan. Anytime the stock went above this mark, he sold. Anytime it dropped below this mark,
he'll buy in.
And he basically just scout for profits. Now I watch guys on YouTube just sit there and watch the chart and watch them scout stocks for profit. Of course, you got the tax consequences that go with it, but you got to pay your taxes anyway. So, you got to get out of that mindset. But that's how he made that money. He was just scalping for profits. And so I think in certain stocks you may want to hold, certain stocks you may want to have the Buffett style where you might hold Coca-Cola forever because you want to accumulate so many shares because it pays a good dividend and you can pass it on to the next generation. But then there's some stocks, I believe, that you should take a profit at the top, like a TQQ. Q that's ran up $187 and now it's $60.
So the reason why I asked is we know this guy and he's in Atlanta and he's around the same age and he made some serious money and it was about 80,000. So I was wondering, was it the same guy?
No, he invested 80,000 when he.
Yeah, this person did too.
Okay, his name is Hugh.
Okay, no.
So if his name isn't Hugh, then I don't know.
So
but it's amazing.
Let's bring up this. If you take $100,000 instead of waiting for it to move $5, it really only got to move $1 for you to make a lot of profit. That's where that math come in at. So scalping, that's what when you look at scalping, you're looking at the fact that when you look at the hedge fund investors invest $20 billion, they only needed to move 5 cents and they probably made 100,000.
Yeah, more than that probably.
Yeah, I mean,
it depends on what type of stock they're investing in. Yeah. If it was a SPAC, something
and the only thing with scalping is time consuming because you gotta
right.
And a lot of people I think would call that trading on your margins, basically, because you're waiting for it to go up so far and then you out really. That's what it sounds like to me. I don't know if that's what it is, but scalping and trading on your margins, you're buying it, waiting on it to go up maybe 3% and you're gone. Depending on how much you put into it.
That's what they trying to do. Yeah, they trying to get five. They trying to get if it's $10, they wanted to go to $10.05.
Yeah,
right. And then they're scalping.
Yeah, they gone. They're gone.
Yeah. But like Nicole said, or somebody said, you got to be there watching it all the time.
Yeah, that's the only thing, and I think that's what he was saying. He said it just took a lot of time and whatnot. But by then, I mean, he said he had just made some like what was it, about 100-something thousand? He said.
I think so, like $100,000 last week.
Yeah,
scalping.
But of course,
big bets.
Yeah, he's dealing with a whole lot more money. So
yeah, that's what I was about to say. How much is he putting in? He has to be
a lot of money.
A bunch at a time to go up 5 cents.
Right.
So he has so he doesn't have any other job. So he sits here and day trades all day, like for 7-8 hours.
Well, I know he has other businesses, but what he told us at one time, it was him, 2 other guys in his basement. They had their monitors. He had his monitors, and they were just scalping.
Yeah.
So
that sounds like a day trader.
But in our world, in the next,
that sounds like what, Sequoia?
A day trader.
Oh, day trader. Yeah. That's basically what it is.
It's a form of day trade.
Yeah.
Right.
Yeah,
for my profession, I couldn't do that. I could not.
No, you got to get out of that mindset. Stop. You can't say you can't do something.
I bet you'd be able to do it. If you did one trade, you put 50,000 into it, you got 60,000 back out. You'll be a day trader.
Yes, if they had BMWs and clothes, she would do it. Then you wouldn't say I can't. You won't say I can't not buy that BMW. You won't say that. So
I did it. I did it just to see if I could do it, and it's rough to sit here all day long. I did it for about an hour.
Really?
Because I got in a trade and I wanted to get out before it went down.
But could you have set your stop losses or something like that?
No, because I need to watch it every 15 minutes to see if it start turning. No.
So what were you watching? Were you watching the actual price? Were you watching some levels? How were you gauging it to decide whether you wanted to get out?
Well, if I did a gap, I'm looking at the gap.
Okay.
And I'm seeing how close they're getting. Is it gonna fail? But I need to look at it every 15 minutes in order for me to see when it's gonna start turning around. And it's other variables to that, but it's a lot to do it.
So
you only did an hour?
Go ahead. Sorry.
Mm-hmm.
Sorry.
What you say?
You only did an hour?
Only an hour. When the market first opened. When the market first opened, that first hour.
What about like your charts? Were they broken down to like 15 minutes, 1 minute, 30 minutes?
Just 15 minutes and 1 day.
Oh, that's what you was
15 minutes and I'm watching the day.
So that's how you was charting it, 15 minutes and a day?
No,
back and forth.
I'm going to different charts. The 15-minute chart, then I'm going to the day chart.
Okay.
And I'm watching the Dow. I'm watching all the big people because I want to see
which way the entire market
way it's going.
It's going moving.
Right.
But was that particular stock like one of the Dow stocks?
Yeah.
Oh, okay. So you was just trying to. So basically, you were just trying to scout that particular stock, then.
I was just trying to see like how it feel to just be sitting here and watching it for an hour, because that's what we call that's gap, either gap or forex, either one.
It's hard to watch it, isn't it?
Mm-hmm.
Well, just imagine you got 4 or 5 of them that day.
Wow. Right, you can only really watch like 1 or 2 at a time because they moving.
Right. But I saw Cat. He had 4 charts on one screen.
Yeah, you can do 4 charts on one screen.
Yeah,
and you can do double screens. I mean, I have double screens and all of that, but it's still. And then to get in, and then to get out, to like actually get in and then get out
before
hurry
it
up,
down.
Right, before it dropped down. Put your number in or get out and market before it.
Oh wow!
It's quick.
Oh, so see, Sequester.
Right.
Sequester we're gonna have a back channel day with Sequester gonna teach us a class. We ain't gonna do it on live. We're gonna get Sequester. Sequester be knowing all kinds of tricks over there.
So like when you're trying to get out, are you doing a limit trade or are you doing like a market trade?
Well, I'm looking at. I've already said if you get down to here, I'm getting out. But I can set it, and I've done that a couple of times too. Just set it if it's going down. So if I'm getting out, so like buying on the way going down or getting out on the way going down, then I can look and say, okay, if it get down to here, then I'm getting out because it may turn around and go back up.
Right. Okay.
So I might set it a stop for that.
Okay.
I might just sit and wait. That's just like when I do the gaps. If it gets up to a certain amount and if it go over that, I'm getting in. As soon as it go over, I'm in.
You in?
I may set it for that. Okay. And then I may watch it for a little while.
So, but when it gets to that point where it's going up, that's your confirmation that the stock is probably going up. You're gonna get in, and then you're gonna get out.
I'm gonna get out.
So you just basically.
I think I probably made about $15. I did a couple of them because I was testing it out.
Right.
I think I made about 15, $20, but I'm also doing like a small amount. I'm not doing, even though I could do a big amount.
Right.
I just wanted to watch it and see. Then you got to write down how many, when you're doing that many, you got to know, like I did 5 trades. I did 10 trades on this one. I did 5. I did 2 on this one. So when you get ready to go in, you can type that information in quick, get out. So that thing be moving.
Right. Awesome. Let's give it up for Sequester.
Sequester in the house.
It be moving.
Let's give it up.
Good job, Sequester.
He real smooth with it.
He is. And silent.
Right.
Call her the silent killer.
I gotta go. I gotta go. And I got to get it. I gotta get it.
Get it.
I got to get it and get it and get out while I can.
There you go.
Yeah,
so my pastor said today, go get it.
That's right.
He ain't me a new BMW.
I'm not gonna do that.
Well, another thing about the charts is like we was talking about the charts and the data, and just say for instance, there's some stocks I'm gonna tell you like T. Rowe Price. I'm in the T. Rowe Price trade, and it's down to like 160, I think. and it's been as high as like 2.25, and it's steady in a downtrend, right? So I was averaging in. I was charting it up, right? And I would chart it up. It would be down, right? I would go like $3 below the opening price, and the stock would still drop $3 more, and I would buy it. I would just set it up. Let me get 5, and I would still get in. And the next day, I go back, I'll look at it again, and it was still going down until I read the book about charting. And the dude was like, okay, you could average in, or you can look at the trend. And if the trend is continuing to go down, right? So, and I get it. I kind of get it now about this big money sitting on the sideline. If the trend is continuing to go down and you see the volume going down, why not wait until you get confirmation, at least that the tide is turning? And when you see the tide is turning, then you go back in. You might go back in instead of 5, you might go in at 20. But the stock is already down maybe 20 or 30 bucks, and you know, it's low risk but high reward because you know you're buying a good company. You know,
Stacy. That's exactly what the guy from Pension Craft was talking about earlier today. Is that you're averaging in, but you're not averaging into the stock. Average into your own bank account. So you put that money back and you just keep it. You just keep it in the quill, ready to go, ready to fire. It's like putting bullets in your chamber, just ready to go.
Right.
And as soon as you see that trend line change, that's when you fire. And there's a little bit of risk, and again, you can make money on the way down with your puts.
Well, I mean, one of the things I've been looking at because of what's been going on, the trend, everything's going down or whatnot. I revisited myself, and I started looking at a whole lot of stocks that pay dividends. Because they have pulled back, it opens up the door. There are opportunities. There are opportunities in the market right now because a whole lot of them have pulled back so far. You can pick up these stocks that pay really high dividends for a little bit of nothing now. I mean, and if you wanted to like make money or set up your drip account with this stuff, I mean, that'd be one of the things you might want to look at right now, because you can set it up and you can make pretty good money for a substantially whole lot less because of what's happening. So you can set yourself up right now with a nice drip account that's gonna pay you, you know, quarterly, or, you know, whenever. Yeah.
That T Rowe price, just so you know, it pays a $4 dividend.
That's what I'm saying.
Per share. And it's down from 225 all the way down to like 1. And it's just and I think one reason why I think it's down because it holds a lot of Dow Jones Industrial stocks. So the Dow is headed the other way. T Rowe, TROW. T Rowe.
Man,
I'll check real quick.
I have a lot of them.
Yeah.
I have a lot of them. There's another one called, the ticker is 2TWO. It has a nice one.
Hey man, I'm gonna ask you a question,
NLY.
man. Y'all know I can't do it from this side. Let's pull a chart up.
Oh, I got you. I got you right here. Hold up.
All
right. Hold up.
We can actually let's pull a chart up on that.
Right. Yeah.
All right. T Rowe price is TROW. If I don't know if he said it right. TROW. And I'm gonna be honest with you, you know, at a dividend of $4, that's really good.
Yeah.
Here you go, right here, T Rowe. So here's the chart right here. If you look at it,
do me a favor.
I was trading T Rowe. Let's see.
There you go.
How about that? Is that better?
Yeah, it showed a downtrend a little better.
All right. So back in Oh, 1st of January 21. Yeah. Is that right? No, that's the 11th month. Yeah, back in November, I was looking at T-Row and trying to buy it at 153. Okay. And then I was trying to buy it again at 196. And T-Row ran all the way up to 225. Right? Busting out of the Bollinger Bands and so on and so forth. But here we got the 200-day moving average. This is the 200-day moving average line right here. I don't know if y'all can see it. This is blue line.
Light blue.
Yeah, but it dropped below the 200-day moving average. And now if you look at the chart, it's down to, it dropped all the way back down to 160, 159 bucks. And there's still...
It's still going down.
It's below the zero.
Right. And on top of that, you still got sellers in the market. So
it's going lower.
It's a very good possibility.
Yeah, it's going lower. Unless tomorrow it opens and it goes up.
Okay. So that's the week chart right there. Mm-hmm. That's the whole week. You're looking at a lot of sellers in the market. If I go to the day chart,
pull Friday. It's still a lot of sellers in the market.
Right, you still got sellers in the market.
Sellers in the market.
And it's actually a lot of sellers enter the market late Friday because the end of that MACD is actually higher over that day.
Right.
You know what I mean?
See all that volume right there. Yeah. And it's dark red in the MACD. It's not light. So if you take a look at like a stock that runs with the Dow, what's that stock called? I'm gonna show it because I know T-Row. Oh, here, go right here. This one, FDN. This is another Dow stock, and it's getting blistered. And this stock right here is the First Trust Dow Jones Internet Index Fund. So basically, it follows the Dow, and it's getting blistered. And I'll be honest with you, I've been trading this one since
October.
That's December.
That's December.
Yeah, December. Is that December 20? Hold on, let me see.
24th, around 24th, 23rd.
Move this out the way. My computer. Move. Okay, there we go. Yeah. So you're looking at, I still can't see it. Well, somewhere around December. And you look at it, it's been up, been down. But here's the 200-day moving average right here. If you look at it, it never touched, well, it touched it here, but it bounced off the 200-day, which you can consider it being resistance. It bounced here, shot all the way up here to 251. Everybody eating good. And
it hit again.
Again and again. They call this, I learned in the book, they call it the head and shoulders. You got your shoulders over here, your head and your shoulders.
Yeah.
And it's like it dropped off. And also you see resistance here. You got 3 lines right here. One resistance, 2, and 3.
3, yeah.
And here it broke the 200-day moving average, just like T-Row price. Same thing, because they trade in the same stocks. And if you look at it, this stock is in a downtrend. Look, bam, bam, bam.
3.
Still sellers in the market.
Well, the crazy part is killing the Bollinger Band. The Bollinger Band done remade its whole form.
Man, look at that, man.
The Bollinger Band done remade its whole form just because of the simple fact that that thing is busting out the bottom. So when it goes up, it's straight profit for the people that buy in at the bottom.
Right. So my point is, just by looking at the data, right? Even right here where it went green, you still had a little bit of sellers in the market in the MACD, even the day it traded higher, and then it just dropped off. So the point is, you can look at the data and get confirmation on when you want to buy back in. So just say for instance, right now, if this stock is 190, you say, well, I may not buy back in until it gets back up to 211, just for confirmation. You know, because right here is where it went green again. You know, you may have a little resistance here, but you may want it to break this resistance right here and then shoot on up.
I
You
mean,
know,
and I think I can say this now. That's what they mean by when you hear on TV when they say it broke the resistance line.
right?
That's when you hear that's how the pundits, the talking heads, are able to come on and talk the stuff they're talking because they're using the charts to say, okay, well, this is in between. All those lines on there mean something, and we ain't gonna go
Right.
through it today. All those
Yeah.
lines on that whole chart actually
It's
represent.
price.
Yeah.
It's past price.
Yeah.
So even like, okay, right here, it traded at 190 on Friday, right? You have to go all the way back if you want to do some back testing. Golly, this thing is in the way. Oh my gosh. Just move, man. Let me see. This is in the way. Okay, here we go. Boom. And let me move this out the way. Okay. So you may have to go all the way back to November to try to find out where price was again. And this may be your resistance at 187. You know, you may not buy in, you may not buy into the stock, or you may put a bid on the stock. If you want to average in on the stock, you say, okay, I'm gonna put a play on it for 187. It's sitting for 190 right now. Don't buy me in until you get to 187.59. If it gets to 187.59, then I know I bought in at the last point of resistance. And hopefully, you know, it's a gamble. It may go up from there, but at least you got it. You didn't go in and bought it at 190 when the market opened. At least you did take a look at the data.
Mm-hmm.
Find out, you know what I'm saying? To find out where the last resistance was at versus a retailer who may just go in and buy that 190 because they think it's a good deal. You know? So that's the, what was the other one we was looking at? Y'all want to take a look at Plan 10?
Pull up too. TWO.
All right. TWO.
Check out your dividends.
That's
too hard. What you looking for? T row price? It's TRO.
No. This is two. This is a stock that Sammy was talking about.
Oh, Two Harbors.
Yeah.
That's a nice stock.
Well, no, I'm talking about the dividends it pays. Actually.
Oh,
this is an example of what I was talking about.
Oh, let me take a look. I have to look on the other chart just to see.
This is one of them I was talking about. You know, hey, take a look at your stocks and what you got and what the dividends are on these. So,
that one pays a 68-cent dividend.
Yeah.
Yeah, it's got a market cap of 1.9 billion with a 68-cent annual dividend.
But when you look at that stock, it was all the way at $8 one time. See, this is one you can actually take.
You can make money and make money.
And you got 500. Say it's gonna be 550. You bought 100 shares. If you hold it all week, all year, you're actually gonna make 68 cents times 100. So you'll make $68 a year just holding it. And if it goes up to $8, you still make the profit.
You're gonna make money.
Yeah. So
yeah.
And yeah, I mean the drip fund, that's one you'll hold and never take profit off of because it'll drip into your account with the dividend.
Yep.
Somebody raise their hand?
Yes.
Nicole wants to put
the stock tick. I got it. Which one you want, Nicole? You want this one or you want T row price?
She want
the one that's 550.
I knew it.
TWO. It's on the screen. It's on the screen right there. TWO.
Okay, thank you.
What's the other one you got, Sam?
There was another one in NLY, and basically all of these are gonna follow the same trend, basically, because of what the stocks are doing, all of them. And I just decided to pull a whole bunch of them and just look and see the patterns between them and compare them. And basically all of them are doing just about the same thing.
So let's And these are real estate investment trusts. This was something I wanted to bring up to y'all, and I think me and Sam talked about it before we started last week. So we do know that it's going to be a lot of buildings converted into apartments pretty soon.
Mm-hmm.
Because a lot of the real estate that's on the market is commercial buildings, like Sears buildings, like Walmart buildings.
A lot of
buildings are being converted into hostels, lofts, apartment, because it's already built structure and it's already got big rooms. All they got to do is open them. All they got to do is put like front faces on them and make them studio apartment. You take a whole old mall and you can go gut all of them out and make it into a apartment complex. You know what I mean? In minimum form. But a lot of these real estate companies, that's why they kind of down, because it's so many commercial properties on the market. Go ahead, Nicole.
So that's what our school district did. They purchased the old Sears building at South Lake Mall. So it's going to be an arena. Like you said, the structure is already there.
Oh yeah.
You have to look for nothing. They just have to go in there with their layout.
I know where South Lake Mall is at. They purchased what at South Lake?
The old Sears.
County Public School purchased the whole Sears building, the old Sears building, and it's a pretty big building.
Yeah, it is. I know exactly what you're talking about.
So what, they gonna turn into a school?
South Lake is a really good location too. Right off.
It is. It was a smart move. So it's gonna be, so a lot of things will be held there. So all of our graduations. So we used to go to the Dome and graduate, and then we went to Georgia World Convention Center. So now Clayton County gonna make, they're gonna make their money because they're gonna rent it out for other events, and then we're gonna have a pre-K Discovery Center. So
there's plenty of parking there too.
Yes.
Yep, tons. It's a win-win too, because a lot of these companies are running into issues because they can't keep up the leases on these buildings in the first place. So you're going to see this. Matter of fact, you're going to see that this is kind of past tense. It's already been happening. A lot of these malls have really been repurposed all across the country, because a lot of the small stuff, the retail places have literally gone under.
There's a black lady down in Mississippi. She took two commercial locations, turned them into apartments, and she made over $50 million last year.
Yeah. And
y'all can go find it on the internet. I don't have it pulled up, but I think I told you about it the other week when we was talking about it. But that's what brought it to my attention. I was like, wow, you know what I mean? Like, people are taking commercial properties. Like I went not too long ago. I was in New Orleans, and in New Orleans, a lot of the commercial properties are called hostels. They took the buildings that were like mini floor buildings, turned them into a hostel, and a hostel is a building that there's only one bathroom per floor. You know, everybody in there, everybody uses the same facilities, but everybody has their own room. And it's really cheap because the rooms are basically office building size rooms, and you can basically put a bed in there. It's kind of like you just live there and it's a big thing and a big movement with the tech sector. The tech sector is really, really, really honing in on hostels, because a lot of people that work in tech, they're mobile, so they can go to city and town to town, get them a room, stay up in there. You know what I mean? And actually be able to live and do what they need to do while they're in the city, move to another city, stay in the hostel, and do the same thing. And some of these hostels, if you go online and actually check them out, they're really just old buildings that were converted into living spaces, and they just rezoned them. And that was pretty much it. So, y'all, if you want to look at it, everybody go check out the new, like, what it's called, a hostel. And you can check out the lady that did the shopping center. It's all kinds of stuff in Mississippi, and she did the same thing with it. And so a lot of these real estate companies, they're losing money because the internet, and we get back to the metaverse and cryptocurrency. Everybody's moving to digital worlds. Nobody's going to a physical place. People don't even buy groceries no more. They just order it online. Somebody drop it off. So why do you need buildings? Amazon makes more money than anybody, and they don't have a building. They don't have a storefront nowhere. Everybody is trying to copy Amazon.
I got some buddies who deliver for Amazon, and they run nonstop. They make as much money as they want in the Amazon industry right now, nonstop. They can make as much as long as they can keep going, because people are ordering from Amazon, Whole Foods, and it's nonstop. People order crayons and markers, any little thing, because you don't like me. I'm a real stickler for time. I don't like leaving my office, so
That boy
I order
really is a
it.
stickler for time. That boy, that
What-
tight boy. That's boy. He'll squeeze a minute out of a second. I mean, he'll squeeze an hour out of a minute, boy. For real, boy.
Hey,
Woo.
Hey, but the reason being,
Money is time.
thank you. Tell them
Hey man.
time.
Ooh.
You
Time.
ever want to make some more time with somebody? Go get around that man now. That man, that'll make time out. It be 29, 30 hours messing with him.
Well, listen, I got an Amazon card last week.
Uh-oh, I got
Amazon business
credit
card?
this week.
Huh?
A business card or
No, an Amazon credit card. It just makes everything great because I just hit.
Well,
I just
all right.
ordered.
I got Amazon business credit this week.
Oh, that's right. No, I got just a regular Amazon credit card to just order markers
I'm
and
trying to
nothing.
sell mine. I ain't trying to buy mine.
Hey, Nicole, listen now.
Messing with you, Nicole.
Listen though. We told you and we talked to you about doing the shell company. And so like the Amazon card you got, if you had your shell company in place, when you ordered, you get a discount. Plus you get the points.
And you just said you can't do the scalping thing, but you can
You
go
said-
shop
you
at
said-
Amazon.
And those are big. Those
You
are
get the
big points.
discounts from Amazon, so you don't pay the regular price that all the retailers pay because you're a business owner. Then you also get points when you buy through Amazon. And so when you got to order that eraser, you have all the points saved up, so you get the eraser for free.
Gotta buy it anyway.
Listen, I told you all. This year I'm gonna get to that. I'm gonna get.
All right.
I met with the client.
We're recording, and
I-
by April,
I-
if we hear you talking another way, we gonna wait a minute, Nicole. You need,
no, not
Accountability.
April.
So is this Amazon card credit? Is it a business account?
I'm trying to get me a business account. So I had one client today. Y'all know I call myself a vision coach now. So I'm trying to help people, get their lives together.
Really?
So I'm coaching people. So I met with my
Amazon card is a good thing to get. Just letting you know, Ms. Sumner, it is a wonderful thing because all the stuff that you can get off that, even your card gets, I believe, 5% on everything.
Yep.
Everything you get through Amazon is 5% back.
I got a nice little limit.
It adds up. It adds up. They sent me a thing. I've been in Amazon. I got a card like 2 years ago, like right before the pandemic started, because I've been a long-term Amazon person. I mean, I know these people like by heart. I got 800 number and all that. The thing is that they sent me a thing and they said, they said, look, man, this is what you could have redeemed in cash from your last year's worth of purchases.
Wow.
And it was almost 4 figures. And I was like, what? So I went and I got a card. As a matter of fact, I have, where's it at? That's my old one. But I just got, at the end of the year, I got iPhone 18, 12, sorry, not 18. An iPhone 12 just with cashback money.
Whoa.
Not lunch money. Not your sandwich money, right?
Not your sandwich money, huh? You got this.
I could have got a lot of sandwiches.
Hey, bro. I
could have got a lot of sandwiches, but
that's awesome right there, man.
So that's and the thing is most of those things were business expenses, and it expenses out real easy too because you can pull down a chart and pull down the digital receipts in PDF format for everything that you've purchased. It makes it real easy to pop into QuickBooks. So that's another reason I like Amazon. I'll buy stuff from Amazon sometimes, even if it's easier to get it somewhere else. I'm like, well, I ain't even got to worry about the receipts, because every month I just pull down a chart at the end of the month that has everything that I need and move it on over to QuickBooks.
Oh,
That's my goal for this year. That's on my vision board in my bathroom, to get a LLC. So that's the goal.
I just got another one myself, and I just got an account. We're talking like within the last couple of weeks, because I planned it. Because I did all this contract work last year, and I was like, I need to put an LLC behind this going forward, because I was like, man, it's bad enough the 15% for self-employment tax, the 1099 self-employment tax, that kind of stuff. But going forward, I was like, man, I don't want to do it in the middle of this year, because then my taxes are going to be really stupid. So I really planned it out, and my new LLC got incorporated on the 4th of this year.
Oh, congratulations!
End of last week, I just got thanks Navy Federal. I forget what
I love Navy Federal.
Few groups, but Navy Federal just set me up. I just got a business checking and savings. And
awesome.
Now I'm about to hit up Franco about lines of trade lines for this for these accounts.
Oh, I got you.
So it's own separate entity just for that level of business that I'm doing.
That's awesome, Reggie. Navy Federal is an awesome bank.
Everybody in Next Play better have business credit by the end of the year.
I am. I'm on.
Yeah, man.
That's
like I said, I'm just
credit card.
You can do it so perfect because you have a business, right?
Yeah, but I don't have a business credit card.
Everybody in Next Play gotta have a business card, business credit line by the end of the year. And you gonna be surprised. Y'all gonna be surprised. Nicole, you can even get BMW business credit. That's the crazy part.
I don't want that credit.
You can buy your BMW and never have it on your credit report.
Yes, thank you for me that.
Get BMW. It's time to go up to G. You can get a G wagon.
I now want a G wagon. Yeah, I want a G wagon
on business credit, and then you can write the whole thing off.
Let me tell you, I met Jimmy at the Cracker Barrel in Alpharetta. Jimmy said, "Come on, Nicole, let me put you in a G wagon." I said, I think I want to be in a G wagon.
Well, Nicole, let me offer some advice, Nicole. Go test drive it
first.
Test drive it.
Because it's
yes, sir.
Test drive that car first.
Okay.
Wait a minute, but I'm trying to figure out how you're on the investor show. And hold on, let me get this together. You telling me a minute ago you can't do scalping with $80,000 or $100,000, but you can roll down the street smoking Indo, sipping on your gin and juice.
I don't do that.
Don't say that. You just got out of church today. Don't even talk like that.
That's right. That's right, Reggie. I was in 2 services today.
Well, she don't lie already. Then listen. Hold on. She don't told a lie after church. She going. You guys go get you some holy water, cause you can't tell me no to scalping and yes to a G wagon. Wait a minute now. We got.
I said in my profession, I don't have that type of time.
Like you in church again.
I don't have that type of time.
Hey, Nicole, I hate to say it, but you do.
How? I'm at the schoolhouse all day.
I know. I understand what you're saying.
And don't y'all talk about my social time, because that's my social time.
You gotta pay for that. You gotta pay for that time.
I know. I'm
trying to sequester.
Anytime that you want back, you gotta pay for it.
Time, money, hard energy.
Thank you. Thank you, Sister Sequester. I am. When I looked at my portfolio, I was sad.
Well,
I'm just knocking stuff out, bam, bam, bam. So yeah, I'm sure. I'm hoping very much so that by the end of first quarter, I've got business credit set up, by the end of the year, I want a van dedicated for the business. And I don't even know what I'm going to do with it because I don't know where I'm going to park it because I already got 2 cars in the garage in the driveway.
You just put them on zero.
But that's my goal for this year. Remember we were talking about
Fiat.
So
Like Stacy.
Oh, we got a new baby in the fleet.
Oh yeah.
Which I got.
Stacy, I need one-on-one counsel.
We got a new baby on yesterday. We added a Chevy Spark to the fleet.
Oh, that's tiny too. That's tiny. Yeah, isn't it?
That's a car, Stacy?
No, actually, it's bigger than the Fiat.
Yeah, it's bigger than the Fiat.
Yeah, it's bigger
than the Fiat.
Still
a compact car.
It's compact, but it's bigger than the Fiat.
Yeah, and they're both subcompact.
I'm telling you, this is what I'm thinking. And I could be dead wrong, but it is what it is. What we was talking about, the way the world is changing, how everybody's staying home, and I know for a fact these gig guys out here with this Amazon, Instacart, they can run nonstop, and they need those vehicles. Those compact vehicles to get in and out. That's good on gas, and it's just amazing.
So is this is a rental for your?
It's a Turo.
Yeah, just have some cash flow for my truck business.
Y'all gonna ride down a certain street. Y'all gonna see cars by cash flow.
See, claim it.
Cars by cash flow.
He might have a T-shirt. No, he might have a T-shirt next week. Right.
It's gonna say cars by cash flow. That's what it gonna say on there.
Hey, but I got a question though.
Stacy, can you be my mentor?
Yeah. I'll be your mentor. You be my coach.
I'll coach you now. Y'all know I got 12 years of counseling background.
Hey, but one more thing before we go. I got a question. So the interest rate is going up, right? Inflation is going up. The prices of houses are going up, right? And there's this big wealth gap. So what's going to happen to the prices of real estate with all this stuff going on? And the market is going down. So what's going to happen to the price of real estate? Go ahead, Sam.
Just to let you guys know, the national average of homes, national average is now $346,000. Now, our race, still stuck looking for the houses, looking for 2. Let me let you in on a hint. You're not going to find them. If you cannot wrap your mind around spending at least $350 and up, you're going to be in the lower part. They're wiping away the middle class, lower class, and the upper class. If you can't wrap your mind around $350,000, you're going to be left behind. Because we all know the upper class needs somebody to serve them. The middle class is the problem because the middle class, they have a choice. People that have choice, there's no loyalty. There's no sense of desperation. Only the lower class people have a sense of desperation. The upper class people need people to work for them. So what do? You get rid of the middle class. This is that wealth gap.
So is it safe?
Either you're gonna be with them or you're gonna work for them.
Is it safe to say that has the bar moved? The question that I asked at the beginning still goes to what I just said.
Yes, it's moved.
It's moved.
It's moved.
And it's not going to go back down. They've set
it's not going down, but
and they set the new line. Like you said, the medium average is 300. So the average used to be 100,000, 150,000. They've moved the line to create the new world where you're going to make a lot more money, and the people that don't acquiesce into the new way of making money, this is, you know what I mean, then you're going to be left behind. And it's not going to just be our culture. It's going to be a lot of other cultures that don't understand what's actually happening.
Yeah.
It's gonna
And
like
what you really have, you have people that are still like our generation. We're stuck in that mindset. If we get a house and we pay it off, we'll be fine. But let me ask you this question. With all the gentrification and reclaiming stuff and all this, how do they take properties from people?
Taxes.
People that have already paid for
Tax.
their houses. So you with that mindset of saying, hey, I just want to pay for my house and live happily ever after, that's not necessarily so. All they have to, all it would take is for another person with insight and say, hey, I'm gonna put $1 million house next to this $300,000 house, and guess what's gonna happen? Your taxes is gonna go up, and before you know it, you won't be able to afford your house, and that $300,000 or whatever kind of house you got will be taken over, and they will build another million. So we got to get out of that mindset of, hey, staying. I'm gonna be fine right here. No, you need to either bump your imagination up and gear up, or you're going to be geared down and you're going to be serving other people. I'm guaranteeing.
And that was church for today, sir.
That's it. Hey, that's all I gotta say.
Church
That's all I gotta say. I mean, me and Stacey have saw it in Miami, in Orlando. These people are not playing. These people are dealing with millions, 38 million. This dude said he don't do a deal if you don't come to the table with 38 million. We're walking around here thinking about getting 1 million. These jokers are way past that. You got to start changing your mindset, and you got to start being a steward of your credit and learning how to use that credit. Yep. That's what you got to do, because they're sure doing it.
Because if you think about it, in the United States or here, even though a house costs $200,000, right? Here, if you can get up $10,000, you can get the house for $200,000. Yeah, because you can leverage. Yeah. You can leverage your money here.
Yeah.
You see what I'm saying?
Right now,
in the United States, that's what you can do. Now, other countries you may not be able to do it, but here, if you can get up to down payment, now whether or not you can keep it after the fact, that's a different story. but another thing about this gap, this wealth gap with the rich and the poor, right? So if the houses are too high for people to buy, they're going to have to rent. And so now you're serving the upper class, because now you're putting cash flow into the upper class pockets. And chances are it's going to be tough to buy these houses at $1 million a pop.
And guess what? Guess what else that's going to eliminate?
What?
Even though you won't be able to afford it, and guess what? You won't be able to afford it, and your credit score is 800 and up, but you can't afford to get into a house because your mindset didn't change with your credit score.
All right, everybody. I want to thank you again for joining Next Play Investors. This is another great show where we actually got a chance to talk about a lot of real topics about the community, talk about what's going on in the world, and be able to set a baseline for how we operate. Next Play Investors is about sitting around as a group talking about things that resonate with people that want to try to do better, be better, have a positive mind, positive attitude, positive life. We're here every Sunday at 7:30 to 9, and we always trying to learn something and share information that each one of us are actually doing ourselves. So, if you want to actually check us out, join the group, get in on the chat, be able to listen, learn, and understand what we're talking about. I mean, Next Players Investors is a free group. You come in, join, be in, and you can actually listen, pay attention. Be here on Sundays, listen to what we're talking about, listen to what's going on, and the things that we actually get a chance to show. We do it because we all want to be able to give back and be able to build and be able to build and do many more things. And so, we're invited. Glad that you came out. Hope to see you in the chat sometime talking with everybody else. Remember, we got the WhatsApp chat that we talk on the mobile. You can post, anybody can post a message inside of the Facebook group or on the Facebook page. Catch us on YouTube, Instagram. Either way you go, we're on social media. Definitely want to like, follow, and subscribe. And then that way you'll be able to get in on the actual conversation. Maybe get some questions asked, and maybe you can get some one-on-one coaching, whatever suits your boat. We definitely want to make sure that you can actually come and join us every Sunday, and make sure you're able to be with us because we can listen to what's going on and what's being said. Other than that, we want to thank you for watching Next Play Investors, and definitely we want to see you next Sunday. Everybody have a wonderful night, and we'll see you then.